The Money Show. Personal finance.
Before we get into the serious matters of personal finance, I posted a picture of Warren Ingram in his new jacket. He's been shopping, and I thought it was very pretty. And so I did ask him what color it was, and he insisted it was one particular color. I insisted it was another. And tragically, for most of you who've responded on social media, you need to get your eyes checked because you're colorblind. You are. It's not red. It's pink. It's the color of strawberry milkshake. Isn't it? Real men wear pink, Warren Ingram, and I'm very impressed by your courage, so well done. What a courageous choice. If you're not going to use it, by the way, can I have it? Because I quite like it. It's very manly. It's very manly on you. Now listen, on to more serious things than the trivialities of jackets. We need a little lightening up after the seriousness of, it's EFF, says Boy Tomato. Okay, which means it's red. I think that gives you cred. Red gives you credit.
Right now, I don't mind that association.
Well, there we go, because you're very fashionable. Now, on to more serious things. We often talk about costs and investing, and I got an email from Kerry Ann, and I'm not going to mention the company because I asked Kerry Ann for documentation and proof of this, and she didn't provide it. Maybe she's got busy, I don't know. So I don't want to go and lambaste a single company on this particular front based on the limited information I have. But I do need to test with you the veracity of the claim. Says Kerry Ann, I'm having a problem with the fees for my RA. My premium is 300 Rand a month, and I haven't increased this premium since inception, which was in April 2000. But since inception of this policy, she calls it, I'm paying 45 Rand a month in fees. Initially, it was 36 Rand 37. It gradually increased every year until now it's close to 45 Rand a month. Even though the premium has stayed the same, this is now 15% of every 300 Rand I put in every month. Please help me how to address this. Kerry Ann. I mean, does that sort of fee make sense on a retirement annuity? Importantly, this one dates back to 2000.
There are a range of issues here, so I'm going to give you an answer, but I'm not going to give you one straight up. I think the first thing is we don't really like, we don't like a lack of transparency when it comes to costs. We all want to know what is the rand amount that I'm going to pay for my investment, and don't hide it somewhere. So the starting point of something like this is, she's saying, 45 Rand a month is high related to the 300 Rand a month debit order, but I mean, if you said, okay, so since 2000, how many? So it's 17 years. Just to
17 times 12 is an awful lot of payments.
Okay, so I'm quickly doing that. So
thank you.
17 times 12.
It's 200 or so.
Yeah, 204. You are a maths genius.
Hey.
Times by 300 Rand. Okay, because it's 300 Rand a month. So it's 61,200 Rand.
That she has invested, and she would have seen some capital growth over that time. But has she seen any growth at all based on the sort of fee she's paying?
So let's look at that. 61,200. And so 45 times 12 equals 540 Rand a year is a fee. Now divide that by 60. What did I say? 61,000.
Yeah.
Just to give it a context. So so that gets us to a fee of 0.8% per year on the value of the assets. So if we're knocking that to say, okay, 0.8% for the cost of an investment, let's relate that to the unit trust world, where if someone said to me, I've got an RA and my cost is 0.8% a year and I've got a debit order of 300 Rand a month, I'd say that's not a bad cost. There'll be a few buts, because there are always going to be buts in this instance. One is, I'm not sure that, and that's why you wanted the documentation, is there also a fee on the asset management fees? So is this just an administration fee, and then there's still an assets under management fee, which I expect it would be. But if we were comparing apples with apples, a unit trust company that offered an RA would charge you about 0.5% a year. That's the highest fee I've seen. And so in this context, if you say, okay, so the administration here is 0.8 versus 0.5.
Okay, so it's not a train smash, but it feels like a huge chunk of the money is going in fees. I mean, I don't get where she's paying 15% of every premium. She's paying in fees, and now you're giving me 0.8%. I don't understand the difference in that calculation. I may have been able to do the sum in my head, but this is where the financial advisor Pat comes.
So and I think this is probably the downside, or I mean, either way, of transparency, because there needs to be an account fee. And I would be saying, there must be a fixed cost to opening an account for anybody. There's going to be, you have to pay the FSB to have a life assurance license, which you need for an RA. I know it sounds funny because the one's an investment, but that's the law. Then you need to run those accounts, run bank accounts, all of that stuff. That's going to have a cost. And I think if you say to someone that it costs us 45 Rand a month to open the account. In the stockbroking world, for example, that's really where they've gone. They've gone away from percentage fees to run a stockbroking account, and they've said, whether you've got 1 cent, 1 million Rand, it doesn't matter. Mm-hmm. It costs us X amount to open this account and to manage it for you and to give you your tax reporting, etc., etc. Ironically, in the stockbroking world, those accounts cost you somewhere around 45 or 50 bucks a month. So now I'm looking at that and saying it's it's high, but at the same time, you actually can't go into the unitrust world, for example, and get in most of these companies won't give you an RA for 300 Rand a month.
Yeah, but okay, so how are you actually meant to get ahead when you're paying such a high fee?
Because that fee is 45 Rand a month, and you're only relating it to the debit order.
Yeah.
So remember, the debit order adds to itself.
I am. And
it adds to itself again.
It does. Okay.
So over a year, you end up with whatever it is.
No, fair enough. I understand, but it still feels high. It still upsets me.
And I think that part I agree with. So what I'm saying is it's 0.8% versus 0.5 just in the one context. It feels high to me, and you would think that if it's a big insurance company, they must have critical mass. They could probably do it a bit cheaper.
When are we going to get more clarity on pricing? Because there's so much argument around RDR, Retail Distribution Review, TCF, treating customers fairly, and all of these sorts of little clues as to better treatment of investors and clients into the future, and yet it seems to be very, very sluggish and slow.
I think, and I can't say that I know this for a fact. I mean, we know the last deadline we were given by the FSB, and it was a hard deadline, was 1 May. That's come and gone.
That's whooshed past.
So I'm not quite sure. But what I do know is, what I believe is that we've got major conflicts and vested interests is really what I want to say, not conflicts, vested interests arguing against each other here. So you've got I think the big insurance companies arguing for one form of RDR that I think really suits their business model. And then you've got, my sort of side of the industry, the independents, saying, no, you can't do that. And I think you've now got the regulators in the middle trying to come up with the best solution for the client in this instance, and that really must be what's right for the client. But I mean, that must be the overwhelming major factor here. At the end of this whole process, the client must win. But
I would like a statement at the end of the year. Is this unreasonable? That says at the beginning of the year you had a balance of 1,000. At the end of the year you've got a balance of 1,100. It has cost you this year 100 Rand to manage this account. You've paid for your financial advisor, we've paid the broker, we've paid all of the fees. So you would have had 1,200. We kept 100. We gave you 100. So now you've got 1,100. And now you start the new year with 1,100. And at the end of next year, I want to see if I've got 1,200 and how much I paid in fees in total. Really simple, really clear. Don't obfuscate. Don't fudge. Don't lie. Don't hide. Why is it so hard to deliver?
I think because of the vested interests. So I'll give you an example. In the unitrust world, when you get your statement, if I'm your advisor, and it's on most of well, I think pretty much they have to be on all of the unitrust companies, you'll see my fee as a rand amount. What you won't see is the unitrust cost as a rand amount. They'll tell you it's a percentage. Yeah. And it's frankly not necessarily in their interests, I think, to show you those costs, because suddenly
you might get a fright.
You'll quantify that now as a rand amount. And what I've realized is most of us don't understand percentages. We don't do them. We don't sit down with a calculator and work them out.
No.
And so we'll say to ourselves, like I've done now, okay, so that's 0.5 versus 0.8.
It's not a train smash.
It's not a train smash until you now get it to a rand amount. And then you start to say, well, now I want to ask more questions. Why? What value am I getting? So I think your request, if we said by the end of the year that's reasonable, I think it is reasonable. And the only thing I would ask for is that everybody's fees are shown exactly the same.
And why can
in rand amounts.
Why can the regulator not demand that?
I think they should, but I think that's where the vested interests kick in again, is because someone will say, hang on, but if we do show that, then then people, the low income will now be unadvised. That seems to be one of the very big arguments now. And if we look at the UK, we're going to lose a whole lot of advisors, and the country can't afford to not have advisors. And I think that there's merit.
You and I were at the same conference the other day, a financial planning conference, in which it became very clear that we have a far higher proportion of financial advisors in South Africa per head of the population than the United Kingdom does.
Yes, I think the one piece of information there that I think they should have said was let's look at properly qualified real advisors as opposed to
brokers,
salespeople.
Yeah.
And I think then the market would look radically different. And I think that's the difference here. We have, but I think included in that number would be people who sell funeral policies, etc. And with respect to most of the people who sell funeral policies, they haven't really got a qualification in financial advice at all. And so that's the issue.
So is there the foolproof idiot's guide that Bruce can understand that tells me what I'm actually paying for an investment in a market that in 3 years has gone nowhere? I've paid an awful lot of fees on a retirement annuity, for argument's sake.
The answer is I don't think so. I think you're going to have to do some sums yourself, and you're going to have to get through just understand all those layers of costs. And you can get them if you ask for them. And you were talking earlier about shopping around, and this is in one instance where you do need to be a little bit bolshy about this and actually push back to the product providers.
And what if you'd say, I don't know, hypothetically, you'd made 5 payments into a retirement annuity product, and this year you decided you weren't going to, and the person who sold you the retirement annuity, you haven't spoken to them for the last 18 months, but they're still taking 1% of the value of your investment as a fee every year. So that might make one grumpy.
It can and it should make you grumpy. I mean, I think the point is you're paying for quality advice, and you should be speaking to your advisor at least once, and I think probably twice a year as a minimum. And you need to understand why things haven't gone anywhere, etc. And if you're not getting that, then the point is what you're paying for, you're not receiving. You are paying for advice. You should be. The law requires you to actually be spoken to at least once a year. Whether it's by email or phone call or meeting doesn't matter. Proactive conversation and sending the person a statement doesn't count. And so I agree with you. And my issue is that again in the insurance company space, you get sold an RA and then you might not actually know exactly what the fees are, etc., etc. In the unit trust world, you could fire your advisor as the answer and say, hang on, I haven't seen you, get out of here, and your fees drop. So if you've got a unit trust RA, my advice is if your advisor is not making contact with you in the last 12 months, fire them and reduce your fee.
If this does nothing else, this program this evening, it must make you a more bolshy consumer of financial products. You've got a right to know what you're paying. You've got a right to know all of the costs that you're paying. And don't take for granted a thing called a total expense ratio, because it's not a total expense ratio. It's a percentage of part of the costs.
And again, then ask for the explanation in rand terms. So please calculate that for me eventually in rands. And my last comment there is that you need to know 3 things. What's the advice fee then in rands? What's the administration fee in rands? And then what's my actual investment management cost, my unit trust cost or whatever in rands? Tell me what that is, all 3 layers. Don't tell me the one bit, because that's what I'm seeing at the moment. The insurance advisors are saying, no, your cost is 0.5% here. Well, actually, no, that's just to pay the advisor. That's not to pay the insurance company and the fund costs.
How do I know if it's too much?
My guide will always be somewhere in the region of, let's just say 2.5% to 3% is the top end of all of those layers of costs. That's the maximum that you should be paying. Obviously, it's ideal to pay less, but there are going to be factors that kick into that. But to me, if you're paying more than 3% a year, you're paying too much.
Warren Ingram from Galileo Capital this evening on The Money Show.